This is the second part of this video series. In the first part, we learned how to calculate gross profit or loss, okay? And in the last part, I'll show you how to figure out working capital, okay? So this series is very important. I hope you will watch this all, okay? So before you watch this one, I'll recommend you, please, if you did not watch the previous one where we calculated gross profit, watch that, then you come back here, okay? So we are doing a question taken from IGCSE Accounting past papers. Here we see some complicated adjustments, okay? So here in this part, I will show you how to answer these complicated adjustments in your exam, okay? So here first of all, we wrote gross profit $108,400 we calculated in our previous part, okay? Here on the question, VC, a sole trader, prepared the following trial balance from his accounts on 31st August 2021. So here we see a big list of balances, okay, and trial balance is balanced. So complicated thing is at the end of the question we have 7 adjustments. Some are easy and some adjustments are really difficult, okay? So here one by one I will show you how to write correctly, okay? So after gross profit, what is our next step? If we have any incomes related items in the trial balance, we need to add to the gross profit, right? So here on the question we have commission receivable. It is on the credit side $2,200, and we also have discount receipt $1,400, okay? These two items are incomes, so we have to add to gross profit. If we don't have any incomes in the question, we will ignore this step. Direct, we will subtract all the expenses from this gross profit to calculate profit or loss for the year, okay? So here we will write add incomes. So here we have commission receivable. So it is $2,200 on the question, yeah? So why we wrote here this amount? You might be thinking, because we have an adjustment related to commission receivables, okay? So on the question, adjustment number 2, commission receipt of $800 was owing at 31st August 2022. Owing outstanding unpaid accrued area, okay? If you see these words, you will add, okay, to the relevant items, okay? So here it is owing, means this amount is not yet received, yeah? So we will add with this money $2,200. So if we plus $3,000, yeah, 2,200 plus 800, okay, great. Then next item here on the question we see it is discount receipt, yeah, it is also incomes related item. So we will write here discount receipt. So here on the question we see it is $1,400, okay? Now if we sum up this all incomes with gross profit, what we see here, it is $112,800, okay? Now we will subtract our all expenses from this amount, okay? If our expenses are more than this, then it will be a loss for the year. So on the question we have some expense related items. So here we have discount allowed $600, it is an expense. We have insurance expense, we have repairs, it is also an expense. Salary and rates, these two also expense, okay? Carriage inwards, we have taken this amount to calculate gross profit, okay? So it is expense, but it will not come here in this section, okay? It appears in the first section, trading account. Okay, so let us write here less expenses. Okay, so first of all we will write discount allowed, it is $600. Then we have here on the question insurance, it is $9,600. Okay, so here we wrote insurance because we have adjustments. So on the question adjustment number 5, the insurance included $700 covering a private insurance premium for BC. Okay, BC is the owner of the business. So owner's related expense will not come here in this income statement. Okay, so it is owner's personal expense. So personal expense will be subtracted from here and will be added to the owner's personal account. Okay, so we will minus this amount. So here minus $700. Okay, so we get here after subtraction $8,900. Okay, this is our insurance expense. Then we have on the question repairs. So it is $12,400. Okay, so again we have adjustment, we wrote it here. So on the question adjustment number 6, the repair included $4,000 that related to a new attachment for machinery. So these expenses are not related to the repairs. Okay, it is actually capital expenditure. Okay, so this amount of expense will be directly added to the machinery, which is a non-current asset or fixed asset. So here we will subtract this amount from repairs and we will add to the machinery. Okay, so let us write here subtract $4,000 and we will get here $8,400. So this adjustment will be confusing to many students. Okay, so maybe you will subtract here properly from the repairs, but when you calculate depreciation you need to add this 400 to the machineries to calculate. Okay, very good. Then we have here our next expense, it is salaries. We saw on the trial balance $53,900. Okay, so we have salary related adjustments. So number 3, the balance shown for salary covers the 11 months to 31st July 2022. Salary for August 2022 were due and unpaid. There have been no salary increases over the period of 12 months and an equal amount is paid each month. So here the salary is due for 1 month, it is for the month of August. We are preparing this account for the year ended 31st August 2022. So August month's salary is not yet paid. That means this all expenses are for 12 months, but the salary is not for 12 months as August salary is not yet paid. That means this amount is paid for 11 months only. And on the adjustment it is clearly mentioned that every month there will have a equal amount of salary. So now we will calculate 1 month salary and we'll add to this amount. Okay, so as this amount $53,900 is paid for 11 months, so we will divide this amount by 11. Okay, so 11 months. So if we divide, we get here $4,900. Okay, that means every month $4,900 salary is paid. Okay, so we will add this amount. Okay, it is not paid, outstanding. Okay, so if we add $4,900, we get here $58,800. Okay, great. Then Our next expense is here rates. So on the question amount is $6,000. Okay. So again we have adjustment with rates. So number 4. At 31st August 2022, rates were prepaid by $300. Okay, prepaid, advance, same thing. So advance and prepaid we always subtract. Okay, why? Because this amount is not related for this financial period. Okay, it is for next financial period. So we will minus this amount. Okay, so let us subtract here $300. So we get here $5,700 after subtraction. Okay, then we have here on the question depreciation. Okay, it is not in the trial balance. We have an adjustment number 7. Machinery is to be depreciated at a rate of 20% per annum by the reducing balance method. A full year's depreciation is charged regardless of the date of any purchases. There were no disposals during the year. Premises are not depreciated. Okay, so here we have machinery and premises. Okay, these two are non-current asset. Okay, so here we don't need to depreciate premises, but we do for machineries. Okay, so on the question we have machinery in the trial balance. It is $52,000. Okay, so there is a provision for depreciation in the trial balance for machinery. It is $28,400. Okay, so now how to calculate depreciation? We need to use reducing balance method. Okay, it is mentioned on the question. So how to calculate depreciation using reducing balance method? You need to calculate depreciation on net book value. So you need to calculate net book value first of all. But how to calculate net book value? Simple formula you need to remember. Net book value of machinery equal to the cost value of machinery minus provision for depreciation of machinery. So here the cost price, the cost value of the machinery was $52,000. Okay, now we saw on the question the provision for depreciation is $28,400. So we will subtract this amount from $52,000 to calculate the net book value. Okay, so if we subtract, we get here $23,600. Okay, this is our net book value and BV. Okay, now we have another transaction. So when we write here adjust 4,000, what we did? So on the question, the adjustment was the repairs included $4,000 that related to a new attachment for machinery. Okay, so this amount is not actually related to repairs. This is not actually expense. This is a capital expense. Okay, so this expense will be directly added to the machinery. Okay, the cost price was $52,000. So now it is a new addition of machinery. Okay, so now this amount will be added here to calculate the total value, total net book value of machinery. Okay, so here if we sum up 4,000, we get here $27,600. Okay, the net book value we found. So this transaction, these adjustments are often confused, but if you understand perfectly, you will be able to answer in your exam without making any mistake. Okay, so now here on the question, on the adjustment, we had rate of depreciation, it is 20%. Yeah, so now if we multiply by 20%, we get here 5,520. So This is the depreciation of machinery. Okay, good. So let us write here depreciation. So here we calculated $5,520. Okay, so these are our expenses in this question. So now we will sum up this all four amounts and we will write the outer column. Okay, so the addition is here $87,920. Okay, the total expense. So now here our gross profit plus income is greater than the expense, so there will be a profit for the year. Okay, easy to understand. So let us subtract this expense. $24,880 we got. Okay, so we will write here profit for the year. Okay, so next part I'll show you how to figure out working capital. So these adjustments are very important. Often you see in your exam, maybe amount is different, but transaction, working, everything will be same.